Hi guys, welcome to this video. And yeah, my name is Christoph, my last name is Radika, and my nickname is Radi. So welcome to this video. The indicator we talk about is TradingIQ. It was, why did I call it TradingIQ? Because this is exactly what I was looking for a couple of years. I hope that you will like it. And personally, I think that there's a real advantage to this, okay? So in the thumbnail or in the title, I'm talking about what's the best strategy, what Grok and ChatGPT Pro. So I have to admit, I'm a member here of ChatGPT Pro. I love, let's say, this AI stuff. Not sure if it makes me smarter in the long run, but overall, I'm just curious and want to learn. I asked Grok for Heavy about what's the best strategy for day trading, and basically, when it came out, then what came out then was the following. There is no single best strategy, obviously. I mean, Grok for Heavy is smarter, not to really say that it's only this, but basically what Grok for Heavy recommends is price action trend trading with supply and demand. And honestly, this is exactly what TradingIQ does. It does it better. It does it really, really better than Grok for Heavy suggests. But overall, what it says, hey, identify trend, higher time frame analysis, locate supply demand. I will jump into it. I just wanted to tell you, you know, guys, this is exactly what TradingIQ does. So you might say, hey, Elon's Grok 4, the heavy one, isn't smart enough. All right, guys, I asked even then, and that's kind of funny, I think. I then asked I asked ChatGPT Pro as well. As you can see, I'm a Pro member, so I really was doing deep research, and what it means, what say combining Dow theory and supply demand, highly effective professional level approach, Dow theory, and so on, what it does. And basically then I really wanted to deep into it. Would you consider this the most powerful day trading approach for traders? And what ChatGPT Pro says, yes, for discretionary traders or semi-automatic traders with solid experience, the combination is arguable one of the most powerful and sustainable for day trading approaches. All right, so I want to guide you through. Let's have a sneak peek of how it looks like. What we will talk about today, it means that we will just trade with a trend. We will understand supply and demand and where it makes sense to get involved and where not. We will talk about this. On the right side, this is TradingIQ, a multi-time frame analysis tool which works all across multiple markets. But let's jump right into it. So what's the problem with all the indicators? What most of the indicators have, they lag in price. So basically they lag behind the price. So basically it can happen that maybe price moves already quite heavily and your MACD may be turning around. All right, maybe one time it's helpful that it's maybe lagging. Other than that, it's maybe not so helpful. Overall, it's a fact. You wanna basically stick to the price action and volume action, what's happening, and not just basically only lagging. So there's no real edge in regular indicators. I know this. I tried in the last 2 decades. I played around with every indicator, and frankly speaking, I believe the only standard indicator which has some value is the relative strength index. Other than that, most of the stuff you can forget. Most of the traders, because of these bad indicators which don't work, they trade the noise and not the market structure. So what I will talk about is really to understand the market cycle. I will talk about how to understand market structure. I think this is super important. And obviously then what many strategies fail or approaches fail is they have issues to, let's say, adapt itself or themselves to changing market structure. Quite important, I guess. So you may have a strategy which works perfectly fine today, but if the market changes a little bit, you will run into issues because obviously it cannot adapt. It's a difficulty. Just think about it, okay? So what's the goal? The overall goal is that we need to understand what's the overall trend. We want to understand when institutions are really starting to get involved, and institutions don't trade micro trends, okay? They don't trade micro trends, and I can tell you why. Because they have to place bigger bets, you know? So let's talk about maybe the NASDAQ. A bank, a bigger hedge fund cannot go for a 2-point win in the NASDAQ. It's impossible because he cannot place the volume, right? So a lot of this HFT idea, which is nice, doesn't fully work when you place basically make bigger bets. So think about this, all right? So but what bigger and smarter people do, they try to understand the market structure and the market cycle the market is in, right? It's not guesswork, because when we zoom out, we get a better understanding of what the market really is doing, and then we can start to think about where the market is cheap and when the market becomes more expensive, or we have to basically bet on breakouts, right? So overall, the overall game in trading is not to have the biggest win rate. I mean, maybe I will do a video one day about this, but it's actually something maybe you had a look at already. So the higher the win rate, actually, the worse actually is the worse future you probably will have, because if your high win rate strategy falls a little bit, your whole equity curve will fall off the cliff. Okay, so don't worry about the win rate. Forget about the win rate. Really think about solid trades. Think about good reward risks in your trades when you try to find those. And this is the way to go. 100%. This is something I can promise you 100%. And something what smart money also doesn't do, because they have risk managers in place, they have strict rules in place. They are not overtrading, right? They're not overtrading. And obviously, what nobody wants is uncertainty. The sad thing is we always have uncertainty in the markets in life. That's, I think, a normal we have to accept. But what we can do, we can place smarter bets with a probably good reward risk ratio in order to, let's say, don't risk our accounts with stupid trading, basically, right? So RoDIQ, what is it? You know, RoDIQ is, I think, really the the conclusion of the last 20 years. Okay, if I go back, let's say the last 20 years of trading, I started out trading in the 15-minute, 30-minute chart. And actually, you know, this works. It works because you don't actually overtrade. It works because you are trading the bigger breakouts or the bigger levels. And what I did then, I started in this 15-minute, 30-minute charts, really going for the bigger trends. I started then to go smaller. Yes, it's maybe 18 years ago or something like this, but I wanted to minimize risk, because actually as a trader, you learn you want to minimize the risk. And what happened is I was really starting to scalp, and I will never forget one month. I will never forget this, is what this was in 2008. I had a win rate of close to 70%. And after commission, I didn't make any money. And I will never forget this, because I was so drained. The market really pulled out every energy what I had out of me. And I believe in the last 2 days in this month, I lost basically all the profits what I had before. And this was basically the best catalyst in retrospective, because I learned that this is the way to go. So if you're new to trading, believe me, scalping, forget it. Volume trading, short-term really analysis, in my opinion, it's not really necessary. And going for the apex of trading, in my opinion, does make sense. Okay, I can talk about this more about in a different video, but let's just stick with RoDIQ. So what I did here, what Brandon and I did there, is basically we combined stuff which makes sense. All right, when stuff makes sense, this is something you can build up on. We combined the Dow theory, which was invented basically a long time ago by the innovator of the Wall Street Journal. I think Charles Dow was his name. And what he knew is, if there's a trend has a better chance to last longer than it turns. So the trend is your friend until it ends. We've heard it, and it makes sense. Guys, believe me, I've tested really thousands, hundreds of thousands of systems, and the only stuff which really works in the long time and works also out of sample are trend-based systems. Okay, so believe me this, check. All right, then the second thing is we have supply-demand zones I would like to use to understand even better the market structure, to understand when I get the opportunity to get involved into the market cheaper. Yes, you never, or you cannot, we cannot foresee the future. Will we pull back all the time into these supply-demand zones? But it's a good anchor. And I, as a trader, I always think in the terms of finding reasons to get involved. And reasons to get involved is how much I'm confident in the trade. All right, and we will talk about this in a few moments. So confidence is key. So RoDIQ is designed for day traders, and it works really well, really across the board, because again, as I said, it makes sense. So what it does, basically, it detects market structure, supply-demand zones, real-time trading zones, and we basically have alerts in there, and basically it's really adaptive to trends and ranges. We can show the structure and demand zones and entry triggers and price reactions. I will show you this in a chart in a few moments. And also here, basically, where we can really trade out of a supply demand zone. So some tips and tricks right now in a few moments, just how can you get access to this. So you will get access basically for free. Let me show you this real quick. Go to tradingiq.io, go to sign up, click here, sign up for free. RawDIQ is basically 100% for free if you sign up through our affiliate exchanges. I think it's a gentleman's agreement if you like it. If you don't want to go through affiliate exchanges, then you can try it out 14 days for free, and then a subscription would start. All right. So let's go to the charts real quick and have a look at it. Okay, guys. So this is a practical part of the RawDIQ video, and it's just a glimpse of what we do actually with it, because the rest is in our course online in our educational area. What we as traders, we want to understand is in what market cycle we are in. Are we bullish? Are we bearish? Are we trending? Are we ranging? So these are, frankly speaking, just the two questions we ask ourselves. Trending or ranging? Or are we bullish or bearish? That's the only question, basically the two questions we ask ourselves, okay? And this we can ask basically, we can also try to answer this with analysis. So we look at previous price action, we look at the developments over the last couple of days, weeks, months, whatever. Overall, what I've mentioned is trends last longer than we think. Trends, I said, is the place to be. Trend trading is the place to be. So what you can see here is an hourly chart. And if you go to the daily, this is maybe supports a little bit more what I'm talking about. Trends, the trend is your friend until it breaks. Okay, until it ends, right? Until it ends. So what we can see here, if you go back, that here in 2009, we had the low at 1,000. Now we're trading above 6,000. So crazy times over the last couple of years. Yes, way more money printing. But in the end, we as traders, and this is something for you, hopefully, please remember this. Why something happens, the why, it doesn't matter. The why does not matter. For us, it matters about the what. What happens and how much is my risk? Okay, so these are our basically our questions we have to ask ourselves. So what I'm trying to say here is the following. We want to understand market structure. Are we bullish? Are we bearish? So if I would need to analyze this here, I would say, you know what, here was a high, and then we had the sell-off. So yeah, this is bearish. We have another high here, which was lower. Okay, so this is bearish. When does it become bullish? When we break above this here, right? So, and this is minimal price analysis. We basically observe here the price action, and this is stuff we do on every time frame. We can do this on a daily chart. We can do this on an hourly chart, minutes, ticks, whatever, right? Because the markets have the tendency to do the same all across the different time frames. So let me apply right now RawDIQ in this hourly chart to give you an understanding how this looks like. So let me just get rid of this here. Bam, 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 bam. So what's the power of RawDIQ? RawDIQ tells us if the market structure is bullish or bearish. You might say, no, every other indicator can do this as well. I doubt, because as you can see here on the right side, I zoom in here a little bit, we can see that we are not just analyzing this 1 hour chart right now. We are really analyzing here a 4 hour chart and a daily chart as well. And these are settings you can do by yourself, right? So it's a multi-time frame analysis, and trends become more powerful if you're able to combine and overlay price action in different time frames, right? Because if you have a 1 minute trend, honestly, guys, in reality, it doesn't mean a lot, because if the 1 hour chart is completely against it, you will basically fight a war you will not win. Okay, so what I'm trying to say here is the following. We have the ability here to set next to the trading chart a higher time frames. So internal and external are the higher time frames. What you can see here, we call this here the Fibometers. Why? Because we also get a little bit of more information. So if there is a pullback in this trend, we can see here Fibonacci pullback levels in the smaller time frame and also here in the bigger time frame if we would basically pull back, right? So we get a lot of information, but very, very, very clean without basically have clustered charts. And that's the ultimate goal for me. I don't want to have too much information in my charts. I want to really have a clean chart. And if you have a look at this, I think this makes a lot of sense what we see here. So we have trend, which in reality starts here. And as this is an hourly chart, basically we go here much more up. But you will, when you apply this, you will see it, you play around with it. And as I said, use this as I'm using it. Try to work with this higher time frames here. And I'm using here trend and trend plus for the breakout methods. All right. So what else information do we get? We understand when there is the next big support levels are coming into the game, right? So we are trading right now at all-time highs, so that's the reason that there's nothing on top right now, right? I can show you something else in a few moments. But here, the next strong low comes into the game, right? Here, the next potential big marks would be here. And guys, remember, this is an hourly chart. Yes, it looks far away, but this we will apply this as well to a Bitcoin chart in a few moments, or Ethereum, whatever we want. So we get a clear understanding where the next major supply, or in this case, demand zone is. So in one view, we get all the information. Do we have market structure bullish or bearish? Do we have trend? Yes or no? And are the market structures aligned in the smaller time frame, in the middle time frame, and the high time frame? All with one picture. And that's beautiful. On top of this, we get a clear understanding where the next major support levels come in terms of the strong lows, right? And that's basically the initial idea of TradingIQ, to give you a super clean and I would say actionable chart where you don't have to have any subjective views, because there are just three states, right? There is bullish, there is bearish, and gray is neutral. So we don't give you any subjective views. Hey, do we have a divergence here? Is there something? Am I overbought, oversold? No. It's clear price-based. There's no lagging. This is it. All right. And let me go now into the trading charts, what I'm using basically every day. And let's talk a little bit about my practical, how I'm actually do this on a practical level in a smaller time frame. And as you can see here on the right side, maybe let's start here. We have a 5-minute chart as a trading chart, and I'm using here 15-minute and 1 hour for my bigger trend analysis. So multi-time frame, 5 minutes, 15 minutes, 1 hour, and you can do this per your gusto, how you like it. But I like it. I have to say I really like it, and that's the reason why I can recommend it, at least for most of the markets. I'm using this really all across the markets. So first of all, market structure. So raw DMA here is, I will not talk about this right now, so let me get rid of this real quick. So raw DMA, basically, I will talk about a little bit later. It's a little bit of a more advanced technique. Okay, so what we can see first is the market structure forming in a 5-minute chart, 15-minute, and a 1 hour chart. Okay, so what happens is that we obviously had a ranging market here in Bitcoin the last couple of days. We had a nice selling here and some follow through. Then we had a signal which didn't work, and this will happen. But then basically market turned again bullish, and structure wise, then we turned full bullish, and then we went up really by $3,000 here in Bitcoin, and then the trend is your friend until it breaks. And then we had basically here since then a sideways movement in the last couple of days. So when this, let's say, market then turned negative, we can see it here. We basically started to basically move down then here by about $1,500 in Bitcoin. And since then we are neutral. Okay, there's no bullishness, no bearishness, whatever. But what we can see actually is that we have formed some strong highs here. And that's the beautiful part of it. This was the supply-demand part, what I wanted to talk about. Yes, I know I don't have too much time in these videos, but we have here strong highs, which came into the game here, so the market wasn't able to trade above it. And the next strong low comes in here. So right now, guys, in Bitcoin, we have complete neutrality, right? We have the strong highs, which had been marked out way before. So we knew if we are long, let's say, speculating for higher profits and higher value. We know when there was resistance coming in. On the other hand, let's say if the market really turns down, this is the first level when we know that it becomes cheap. All right. And that's basically what makes it so powerful. With one view, we get all the information what we need, and that's just now Bitcoin. Let's bring on Ethereum. Ethereum is a market I really love to trade and actively day trade actually. And I want to talk about this a little bit more, how I combine this now with RDMA. RDMA is a self-learning moving average, which basically works on a higher time frame. So what you can see here, this moving average is not calculated on this 5-minute. I'm using it standardized on a 30-minute chart, okay? So I'm more interested here in the bigger picture. The 5-minute chart, 1-minute chart is just to try to get the entry right, but overall, it's more about the overall trend, okay? It's about finding the bigger trend, where's the direction of the overall trend. So what I'm doing here practically is the following, okay, guys? And I mean, we can talk about this, how I do this every day. So first of all, we have the same structure in place, right? There's bullishness and there's here bearishness in the market, okay? When market structure turns bullish or bearish, okay. So fair enough, right? So this is already actionable and I like to do this. But I thought, you know what can we do to even improve this? And the results at the Robbins World Cup of Trading, the second place with 200 whatever percent, I achieved without this self-learning AI-based MA. But I thought, trading these kind of pullbacks here can be sometimes challenging, because we actually get a signal here, and then the market starts to move up, let's say 2%, and then basically it goes down 2%. So there's market noise. Market structure is bullish. But in this example, that's the reason why I brought in then RDMA. And what I do, or what I can recommend to do, is trade with this market structure of RDMA plus TradingIQ. So you have RD on your side, and it means if RDMA is blue, just take longs. If TradingIQ turns red, just take shorts and don't do longs, right? So like example, like here, it would be the MA turned bearish. We are short. You could trade it on the short side. Here's a failed signal, but we would not have taken the long trade here to the upside. So it filters out basically some trades which are against the overall trend. And maybe one more example here. Yeah, this was simple. Yeah, just trade long here all the way up, but do not take the shorts here because it's against the overall trend. And it makes it super, super powerful. And basically, I just can recommend that you have a look at it, because for me, it's a strategy which makes sense. It gives you direction of the overall market flow. It gives you good entry points and also shows you where the next major supply and demand zones come in with our B+ and A+ support and resistance setups. And this is the last thing I will talk about this in this short video, because I'm told that I have to do the videos not so long. So we understand market structure. We do understand when great opportunities to buy and to sell come in. And we classify this with B+, A+, and C+. So a A+ is the best setup you can get. A B+ is neutral, which you should consider to take if the reward risk makes sense, and the C+ is just for more or less information purposes. You can uncheck this so to not see it. All right. So this is a more practical guide to TradingIQ. I just can recommend it. I use it every day. I'm really super convinced about it. After really trading with a lot of indicators, creating thousands of trading systems, and being quite, I think, a successful guy in this business. So thank you very much for watching. If you have feedback, let me know. Maybe there's some stuff you miss. Then we are happy to talk about it and maybe to even improve it. Right now, I don't know how to improve it, and I feel confident to give it to you again for free. Guys, sign up here on our TradingIQ website. As I mentioned, go here to sign up. If you don't want to use it, sign up for our paid plan. Sign up through an exchange, and you can basically get access to it 100% for free. Thank you very much. One more note, guys. Reminder: trading is risky. Just speculate with capital you can lose, and before you really start putting your feet into the water, try to do some testing yourself until you feel confident. All right, thank you very much. See you then, and all the best.